Welcome to Branch's webinar on financial wellness. Thank you everyone for joining us today. Financial wellness is a pretty broad term and the programs for them are rapidly evolving. So that's why we have our very own Ryan Gruning from Branch, who speaks with employers every day about what financial wellness means for their employees and why it's an increasingly important benefit. He'll dive into the landscape today, why financial wellness has become so important for both employers and employees, and some of the gaps in today's programs. At the end, we'll go over questions too, so please submit them in the chat box in the top right corner. So take it away, Ryan.
Thanks, Adrian. Good morning or good afternoon, depending on where you are. As Adrian mentioned, my name is Ryan Gruning. I lead our enterprise sales team, and I'm going to try to not to be too salesy today. So as Adrian mentioned, the topic is financial wellness, and really more so financial wellness for the hourly worker. And what does that mean in terms of you as an employer? How can you better serve the needs of maybe not just a salary worker, but also the hourly worker when it comes to financial wellness? We're going to cover a couple things. So wellness in the workplace, meaning what are the programs offered today typically? We'll dive into really what financial wellness is. Obviously, a pretty competitive labor market, so we'll touch on that a little bit and how that applies to you as an employer. And then I think employers tend to approach financial wellness in a few different ways. I want to go through what we see today and what maybe would be a good way to maybe revise that approach. And then finally, the whole goal today is to leave here with a few takeaways on that you can take back to your employers around financial wellness at the hourly level. So expect 15, 20 minutes tops of me, and then we'll answer a few questions here to wrap it up. So wellness in the workplace today historically has meant really, the goal is how can I make an employee more productive, more engaged, and of course be healthy. That's the ultimate goal. When a corporation offers this whole wellness concept, the goal is I want to come to work happy. I want to have a path to productivity, and hopefully if I'm healthy along the way, that's going to help too, right? That's the ultimate goal for the employer and the employee. The whole goal is let's have a win-win for both parties. So ultimately the goal, if I can save $350 a year per employee, I'm typically maybe more engaged at the office. That means a 40% more engagement level. And then from a healthcare perspective, if I can save over $100 per year per employee, as an employer, I'm feeling pretty good. So ultimately that's the goal of wellness. But it's usually sliced and diced in three ways. It's a healthcare side of, or I should say not healthcare, the health programs for wellness, corporate development, and also really the financial side of wellness. Those are typically your three flavors. But you think that all three, they're really tied more to the corporate side and not necessarily to the hourly worker. So you take health. Health typically means what? I went to the gym 10 times this month. I'm going to get a discount. Maybe I joined a yoga class at the office, or I've got some kind of spin class. That's great. But is that going to really affect an hourly worker in the field? Most likely not. They're working at a franchise. They're working maybe in a manufacturing facility. Not typically going to be a place that's going to think about maybe that after work spin class. It's just not reality for these workers. Corporate development, same thing. Corporate development at the corporate level can mean I've got to track the promotion, I've got a mentor, I've got a path internally to get trained. That might apply at the hourly level, but again, probably not quite as much of an option for the hourly worker. And finally, our main topic today is the financial side. So you think about financial wellness and financial health, again, historically more tailored towards the salary worker. So I want to dive more into today what we can do to help the hourly side. So why financial wellness? I think first and foremost, you think about the economy today. We're on an 8-year run of success. That's great for a lot of people. Ultimately, though, you think about an hourly worker, they are not still at a level where they can put a lot of money away. They're making a minimum wage or a little above, and ultimately that's not going to allow you to make these big jumps, even in a good economy. And so we're talking about the vast majority of hourly workers are still living check to check, and that's a burden. Day to day, you're carrying that. You're going to work, and you're thinking about that, and maybe not quite as productive on the job front. And we're seeing stats now like 85% of all workers are still feeling financial anxiety. And that's in a good economy. And we all know that's going to end at some point. We're going to have a recession. We're going to have, have some dips. And that's only going to grow in terms of the, this anxiety that's persuasive, I think, across these hourly workers. And finally, the widening financial capability gap, meaning even especially in an up economy, you're seeing more and more of the people who are used to investing, who are used to budgeting, they're going to keep going ahead and growing their financial portfolio. Whereas, a lot of the hourly workers, and not just hourly, but just in general, there's a whole nother group of people who maybe haven't had, the background in when it comes to finance or when it comes to even simply budgeting and investing, and that leads to a broader gap. And that affects, I would say, what we're seeing today more on the hourly side than salary, and also affects the younger generations, if you call it the 18 to 34 category. So we're seeing those, and that again is going to make up a lot of your hourly workers. So something to think about when you think about why financial wellness for the hourly side of things. And I mentioned a couple minutes ago the whole 85%. So 85% of all Americans are anxious about their financial situation. So what does that really mean? If you dig a little deeper, that means you look at the three buckets here. 2/3 of these buckets are day-to-day. They're not retirement. Retirement's one of the three, certainly, and is obviously very important. But when you think about what they're really concerned about, it's the day-to-day. It's the unexpected. It's the essentials. It's the bread and milk. It's maybe it's that one-off healthcare bill that I wasn't expecting. It's a flat tire. It's the essentials and those unexpected expenses that are truly affecting the hourly workplace today. Retirement, that's great. It's very important, but I've got to get to next Friday first. And the whole point here is we've got to think about financial wellness in the context of day-to-day, not always necessarily the retirement side of things. And what happens ultimately for these workers when they get to a point where they can't pay that bill, or they can't go get the groceries they need, they're going to go get money somewhere. They have to, right? So ultimately that leads to other challenges. That leads to maybe they're overdrafting their checking account. Maybe they're borrowing from friends and family. They're spending too much on their credit cards. And worst case scenario, they're going to a payday loan vendor now and taking on added debt week over week that's contributing pretty heavily to this spiral where it's hard to get out of that, right? Now you're in a cycle of every week or two, I need cash to get through certain things. And maybe there's not an option for all, maybe there's not an answer for every single scenario, but the reality is there are things as an employer we can do to help mitigate some of those challenges and to avoid some of these fees that are eating up this economy right now. I heard a stat about a month ago that I still can't wrap my brain around, that there are more payday loan vendors right now in the U.S. than there are Subway and McDonald's combined. So our two largest U.S. franchises, and there's actually more payday loan companies than both those two combined. That's a pretty shocking stat. I'd always thought about the payday loan world as being a little bit of an old school, going away. But in reality, they're thriving and doing very well, and they're piggybacking off a lot of our hourly workers. And so hopefully that resonates with you as you think about your plans moving forward. And also, we're in a very competitive labor market. I think that's not news to any of you. Unemployment still continues to be at basically at record lows. And you've got to find a way to set yourself apart. And it always starts with the dollars and cents, the hourly wage, but there are things you can do, and you can see the Chick-fil-A one here on the left in particular. Yes, the wage is front and center, but there's also a lot of other pretty important benefits they're offering on this list that that are going to make a difference for these employees as they look around. And so if you're losing employees today to 25-cent raises, think about other ways that you can provide free benefits to them that aren't going to cost you a whole lot, that allow you to hopefully retain and more importantly recruit good talent to your organizations. So I'm just switching gears a little bit. When you think about employers today, and I'm curious if you're in the same boat. Employers today tend to focus on financial wellness as more of a blanketed program across both salaried and hourly workers. I know I always had the same thought. I think when I think of financial wellness and benefits, I think of the 401k plan. I think of the HSA or the FSA, and those are great. We're definitely not saying those aren't important, because they are. They're very important. But ultimately, what kind of workers do you have? Do you have more salaried, or do you have more hourly? And it's not a blanket statement. It certainly varies across both groups. But at the end of the day, emergency savings is a major concern. Day to day is a major concern for over half your workforce, most likely. And that means we've got to think of things to help them today, tomorrow, next week, versus worrying about my retirement in 20, wherever, right? And so I'd encourage you to think more about what can we do in the short term to get them on the right track, which will then allow them to go and save money towards retirement. But you got to get the basics down first to help them and train them, and get them in the right direction, so ultimately they can save for their 401ks. And the whole point of the slide is employers today, I think, focus more on the former versus the latter. They're focusing more on the long term than they are on the short term. And that may not be reality for all of our employees. So this is interesting. I found this. We were looking at some ways to think about financial wellness, and we found a definition from MetLife, and it speaks to us because same theme. It's more about the current state than it is about the future state. So even at a MetLife level, when we talk about financial wellness, you look at these three pieces of the definition. The top two are day to day. They're unplanned expenses that are happening. My furnace broke. How do I pay the $2,000 to fix it? Or I need a new furnace, right? It's $2,000. I've got car repairs. I've got whatever it may be that came up I was not expecting. Or simply, maybe I'm not working until next Wednesday, and it's not my fault. I want to work, but I just can't get the shift hours to cover, and I don't have a lot of options, and I need to get 2 bills paid between now and next Wednesday. That doesn't mean I'm not working hard. It just simply means I can't get the hours that I thought I was promised, and I've got to get 2 bills paid before next Wednesday. And then, so you look at the definition, the top two are tied to that world today. And the last one is the 401k, more the future milestone retirement. But the theme continues to be, let's think about the short term versus the long term. And why do we say that? Well, 80 million people in the U.S. right now are hourly workers. So when you think about the overall makeup of the U.S. economy, 60% of all the workers in the U.S., they're hourly. And so if you're on this, you're listening to this webinar, I would assume you've got a pretty good sized hourly population, and that's not changing. 60% are now hourly, and that's a part of the economy that's not going away. And we've got to think about them when you think about our rollouts of voluntary benefits. And you think about the makeup of that hourly worker. So they've got little to no access to credit, maybe not at any fault of their own. Maybe there's a lot of reasons why, but they have not had a lot of history of credit or been able to get credit. And when they do get it, they're getting very high interest rates. They're getting, they've got minimums they've got to hit. They've got all these excessive fees and fines that could come along just based on a lack of credit history. Really no fault of their own, just simply where they're at, basically a stage of their life they're in. Maybe they're younger, or they haven't had a chance. Maybe they're switching careers. There's a lot of reasons why they have not had a lot of access to credit. And so they're falling victim to a lot of these fees and fines that are out there today with traditional banks. And then, of course, you've got the predatory payday loans that the government's trying to clamp down on somewhat in some ways. But at the end of the day, as we mentioned before, it's still very much a thriving market that is piggybacking off of our hourly workers. And so anything we can do to help them mitigate that risk. But this is the profile of the hourly worker. Not all of them. I don't want to make a blanket statement, but this is very common across the hourly worker base. And they have pay variability. The nature of hourly work means they may not have that shift coverage they wanted. They may only be at 25 hours this week and they wanted to be at 40. And they may have been promised that, but things change, shifts change, demand changes, and they may not get the hours they want. And that leads to this cycle where I've got 2 bills to pay and I can't pay them. Now I've got to go borrow money or go somewhere else to get that money, and that sets me back a month. And now I'm in this cycle that's hard to get out of. And at the end of the day, we're trying to avoid that as much as possible. And that's when we come back to this whole emergency savings. The stats that we've seen now is, it's over half the population does not have $500 to their name. And that makes for a stressful one. You wonder why these employees maybe aren't always as engaged as you want them to be at work. Well, it's because they've got a lot of things to worry about. Maybe they have a couple kids. We've all got bills to pay. And if you're at work worrying about bills, you're probably not as productive on that day when you're in your job when you're worried about that. And it's hard to build savings. So let's think about ways we can help them, which we're going to cover here in a minute. So I'm going to show you, I promise not to be too salesy. We're going to show just a minute on what Branch does and can provide from a mobile app perspective to help your hourly workers. So this is a quick 1-minute video. So hopefully that gave you a little sense of what we're doing at Branch. I mean, as you can see, it's a mobile app. And the key takeaway number 1 right here is a pretty good segue into that. It's factor in technology. And it comes to Branch, we're offering a mobile app that allows these hourly workers to simply log in at no charge to them or to you as an employer. It allows them to come in to a mobile app, look at their budget, understand when their bills are due, have overdraft alerts that remind them, hey, you're below $100 or whatever number they want to put in. And when they have that gap in time and they can't pay that $100 bill or that $48 bill or that $128 bill, they can take out instant access to their earned wages. So the ability now to pay them based on hours worked for a period of time, hours that they've earned, and be able to pay them a piece of that in advance. That's something that now an employer can offer at really no charge to the employee or to the employer that we think and we see every day will help them in terms of these short-term access to wages they've earned that can get them through a pretty tough time. And so that's where technology as a whole can really help drive engagement and productivity of your workforce and just reduce some of the stress that these hourly workers are facing every day. And I encourage you to think beyond the HSAs and the 401ks, right? They are great. They are needed. We all need them. But ultimately, we can't get them to the HSAs and 401ks if they're not able to save any money or if they're have not been trained in terms of budgeting and finances. And as an employer, it's a competitive world. So if there's anything we can do to help train and mitigate some of that risk and give them access, again, to technology that would hopefully drive some of that behavior, that's a win-win. It's a win for the employee, and it's a win for the employer to keep them more engaged, more tenure at your business, and simply a better experience for both parties. And finally, don't forget about your hourly workers. So kind of tied to the second one, 60% of the workforce now is hourly workers. And if you're listening to this, you've probably got a lot of hourly workers. And when you think about your voluntary benefits, you're thinking about 2020 plans, don't forget about that important piece of your business, which is your hourly workforce, and finding ways to get them access in the financial wellness space will go a long ways towards helping the bottom line for you and helping the experience of the employees. So thanks for joining. We're going to open up to a couple of questions we've got that came in during the webinar, and I will address those now before we wrap up.
Okay, the first question we have here is, are there certain enrollment periods similar to more traditional benefits?
No, I mean, I think, it comes to the branch app, there's really no time frame that we couldn't get them started. It's typically a 2 to 4 week rollout process. We tend to recommend middle of the month between pay periods. That helps us helps us have workers with earned hours, and helps us roll it out. But there's no time frame when it needs to be done.
Okay, another question we have here. How do you measure the impact of a financial wellness benefit?
Yeah, that's a good question. What we're seeing is, and it takes a little time, of course, but over time, you should see reduction in turnover. I hate to sound, it's a pretty cliche, simple answer, but it's reality. I mean, ultimately, the goal here is to keep your employees happy. And I think, this kind of benefit is going to do that. And you'll see turnover. We're seeing turnover now in that 15 to 20% range now in terms of reduction. You're going to probably need 6 months to evaluate that. But that's the biggest driver of value when it comes to a benefit such as branch.
So then what are some of the best practices for implementing a financial wellness benefit?
I think it's all about training and adoption across the team. So when it comes to a mobile app, what we'll do on our side is we'll help train the trainer approach. We'll also provide a lot of documentation, physical documentation that can be placed. If you think about an hourly workplace, it could be in a break room. It could be, on a shop floor. It can be within a branch even. The goal is to really just to show them they have access to it. And it's pretty simple, but once people start using it and adopting it, and it involves getting access to earned wages, it tends to you're going to tell a friend when it comes to access to wages. You're going to tell a friend, and it tends to spread pretty quick.
Well, I think those are all the questions we have for now. You can contact sales@branchapp.com in case you have any others. Thank you, Ryan, for hosting us and telling us all about financial wellness. And we look forward to seeing everyone on our next webinar.
Thank you, and thanks to everybody out there for joining. Certainly appreciate you taking some time out of your day, and have a great rest of the week. Thank you.